It's an age-old question whether a company should take a political stance. In the retail sector, customers expect everything to be as usual, and controversial branding policies may destroy a company's decades of work. In this video, we'll talk about 10 reasons why Target is on the verge of collapse. But before moving to the very first point of the list, consider subscribing to the channel and hitting the notification bell. That way you'll never miss future uploads. 1. The retail sector crisis. Target is part of the U.S. retail sector, which has been struggling for the last couple of years. The CEO of Kroger, Rodney McMullen, told CNBC's Squawk on the Street that customers are behaving as if they are in a recession. They're downloading more coupons, cooking at home, and buying lower-priced private label brands to save money. Retail giants are gearing up for an imminent recession or a prolonged period of sluggish sales. Corporations have been divulging their tactics for maneuvering through this challenging business climate this past few weeks while disclosing their holiday quarter profits and annual projections. Moreover, in terms of creating new jobs, the retail sector has recently shown a decline of over 11,000 jobs in June 2023. 2. Retail theft. According to a 2021 study by the National Retail Federation, which used data from 63 retailers, these crimes cost retailers $94.5 billion in 2021, up from $90.8 billion in 2020. The survey found that retail theft accounted for 37% of those losses, while employee or internal theft accounted for 28.5%. and process and control failures accounted for 25.7%. The remaining losses were attributed to unknown sources. A Target store in San Francisco has placed all cosmetic and toiletry items on lockdown due to rampant shoplifting affecting retailers in the city. However, locking up merchandise to deter theft can lead to frustrated shoppers waiting for a staff member to unlock the item. It's highly concerning that based on calculations from the company's financial filings, Target's inventory loss, called shrink, totaled about $763 million last fiscal year. With the anticipated increase, shrink this year would surpass $1 billion. 3. Unimaginable losses. Target Corp's market capitalization has taken a significant hit, losing over $15.7 billion in just 1 month. Bloomberg's analysis indicates a decline of nearly $13 billion since the company's earnings announcements last month, with further obstacles predicted for the retail giant. Despite some internal gains in stock prices following mixed results, Target's downward trend has persisted, experiencing 9 consecutive days of losses from February 2000 till May 31st. While analysts have issued 22 buy ratings and 17 holds for Target, no sells. However, according to recent Google Finance data, Target shares have dropped to $131 from $181 in February, posing a significant risk to the company's financial health, especially when the retail sector is already struggling. Despite an average share price target from analysts predicting a return potential of over 30% for the next year, $177, this is still significantly lower than Target's record high of $266 just 3 years ago. 4. Retail sector shares plummet. Numerous retail stocks are currently experiencing drops, and Target is just one of them. Interestingly, it's not even the worst affected. Foot Locker reported a 40% loss since its earnings report last month, and Children's Place dropped 39%. Since Target released its earnings on May 17, its stock has lost 19% through Thursday's close. During this period, the S&P 500 retail index experienced a 7% drop. Target's peers such as Walmart, Macy's, Dollar General, Dollar Tree, and others all fell during that stretch. Rising costs and inflation have pinched shoppers, especially Target's primary shopping base of middle-income households. Due to changes in shopping patterns, Target's shoppers have shifted from discretionary items like clothing, home decor, electronics, toys, and party supplies to spending more on food, household essentials, travel, and other services. 5. Investors are losing confidence. Investors are selling off their shares, indicating a lack of confidence in Target's financial performance, putting additional strain on the company's financial stability. The retail giant has been added to the refuse to buy list of the American Conservative Values, which divested its holdings and cited Target's woke agenda as the reason for its decision. On that note, some of the most famous entrepreneurs in America, like Elon Musk, expect retail giant Target to be hit with class action lawsuits from investors after the value of the company sunk more than $15 billion since the chain's controversial Pride collection sparked calls for a boycott. 6. Consumer dissatisfaction. Target's decline in popularity and customer loyalty is a major concern for any retailer. Consumers' rejection of its products could result in significant revenue loss. The sale of clothes with LGBTQ-friendly slogans has caused a backlash, leading conservative and moderate individuals to boycott Target. The accusations of child grooming have prompted several stores in the rural South to hide and tone down their Pride sections. Target headquarters staff members held an emergency meeting to prevent a situation similar to the Bud Light situation. However, newly released figures reveal that Target's popularity has hit an all-time low since the metric was first tracked. This comes after a backlash over its Pride collection, despite being one of the top 5 most famous department stores in the U.S., according to research by pollster YouGov. Target has slipped down the rankings and now sits below Costco and Dollar Tree. The latest quarter saw Target's popularity drop to 65% among 1,560 respondents nationwide, which is the lowest it's been since it began being tracked in the third quarter of 2020. Previously, Target enjoyed highs of 71% during 2021. However, 15% of respondents disliked the brand, while 19% remained neutral. 7. Alarmed leadership. Target's top management is deeply concerned about the imminent prospect of shutting down stores, raising prices, and diminishing profits. Their worry arises from the negative impact such actions can have on the company, even though they're often implemented out of sheer desperation to enhance financial performance. These consequences should not be taken lightly, and the executives fully grasp the seriousness of the situation. For instance, Target has officially recognized the menace of retail theft as a threat to the company. According to the spokesperson, similar to other retailers, organized retail crime poses a significant challenge throughout our operations. We're proactively taking steps to ensure the safety of our teams and customers, as well as to deter and prevent theft. Spokesperson further mentioned that these countermeasures involve recruiting additional security personnel, including third-party security services, at specific locations and utilizing novel technologies and tools to safeguard merchandise from theft. 8. Target may become the next victim of retail sector collapse. The company's financial situation is critical and it may face difficulties recovering in the current retail environment. KeyBank Capital Markets has downgraded the retailer's shares due to the resumption of student loan payments stipulated by Congress's debt ceiling agreement, posing a significant challenge for shoppers' discretionary spending. Furthermore, JP Morgan downgraded Target's stock to neutral from overweight and slashed its price target from $182 to $144 due to the host of challenges the company is facing. Downgrade negatively impacted investor sentiment, eroding company confidence, and contributing to the decline in its stock price, according to JP Morgan. Target has been giving back market share given consumer pressures and recent company controversies. This share loss could accelerate back to school and linger into the holiday. 9. Scary speed of stock devaluation. In the last 10 days, Target stock price has experienced a continuous downward trend, indicating a lack of confidence from investors and, consequently, a possible underperformance of the company's financial situation. This decline is mainly attributed to Target's backlash for its Pride-themed merchandise, which included an LGBTQ-focused clothing campaign with tuck-friendly bathing suits and t-shirts supporting transgender children. This controversy significantly impacted the company, resulting in a market capitalization drop of over $10 billion in just 10 days. Before the backlash, Target shares were valued at a little over $160. With a market valuation of approximately $74.3 billion. However, by the end of trading on Friday, the stock had fallen to lower than $139, indicating a market valuation of only $64.2 billion, a significant loss of over $10 billion. 10. Controversial branding. Target encountered substantial public criticism and received even threats due to the controversy surrounding its recently introduced Pride collection. This scenario serves as a striking reminder of the potential hazards companies face when expressing political or social positions and the adverse consequences it can have on their reputation and financial performance. In response to the dire situation, Target was compelled to withdraw specific merchandise related to Pride. The company acknowledged the harmful demonstrations and intimidating conduct from adversaries and released a statement expressing its intention to adapt to its plans. This entails removing items at the center of the most significant contentious behavior. However, Target is currently being subjected to criticism from both ends of the spectrum. Thank you for watching. Hit the like button if you enjoyed the video and feel free to share your thoughts in the comments section below.